Hi guys, welcome to Crypto Insight. In these videos, I give you a rundown of what's happening in large cap crypto, and in particular, the options and volatility space. I started trading crypto options in 2020 after spending 20 years trading equity derivatives professionally. It's been a lot of fun trading the massive volatility in Bitcoin and Ethereum. And I can tell you as a vol trader, the markets with the most opportunity to make money are those that know how to move. I will give you the insight of my trading and experience and how I'm reading the options market flows and positioning my own book to trade the opportunities in the space. Don't forget to like and subscribe to the channel if you like these videos, and hit the notification bell to see these weekly videos as they are released. Thanks a lot and enjoy the video. Okay, so on the Bitcoin this week, as I said, these are the levels. 46 to 47 is the support zone. We tapped 50K, we couldn't break it, and then that expiry open interest proved a little bit too big to get through. That was about 25–30% of all the open interest on Bitcoin last week that was expiring. That's now gone. So in theory, that shouldn't really provide resistance now on the upside, that 50K area. It should be a bit freer to go. That 46.7 zone has acted as strong support. We've tried to test it a few times and it's held. So that's good looking price action there. But for me, really 52K is the area we need to break on the upside to really get going on Bitcoin, and maybe targeting like the 60K area again. Yeah. If we look at the Ethereum chart, the resistance level was 33.70. Breaking that as we speak. We're a little bit higher, a couple of percent above that right now. Let's see if that holds, but that's looking pretty bullish imminently. The target zone for me, if that level is confirmed to be broken, is going to be around that 3,900 to 4,000 area. Basically, that would be my next stop. If we look at the chart on the spread to kind of get a gauge on where that is. It was going through a period of consolidation for quite a while, right? From the start of August, pretty much the whole of August, it was consolidating. And now we've had a pretty decent rally, right? About a 10% outperformance of Ethereum over the last 2 days that we see here. Is it 10% from 0.065? Yeah, it's not too far from that, right? So, and for me, the target on this spread was around 0.08. So looking at another potentially 10 to 15% outperformance on a rally. So if you kind of line up the levels, Bitcoin, if Bitcoin went from 48 to 52, just shy of 10%, then, Ethereum going maybe 20–25% and touching 4,000. So 4,000 on Ethereum versus 52 area on Bitcoin, that would take this spread up to 0.08 basically, which is potentially doable, right? So those are the kind of targets that I've got in mind, yeah? So that's just on the charts and the technicals. In terms of the on-chain stuff this week, the stuff that I found interesting, I'll share with you. So we had, this chart's quite an interesting one, right? So this kind of shows you the levels at which, a lot of Bitcoin is changing hands, basically, okay? And so, you can see that it adds up like the number of coins. You get these sort of cluster zones of like price levels where a lot of trading activity is going on and a lot of Bitcoins changing hands. And it kind of shows you like where people have been accumulating positions, right? So you had a lot of accumulation between 31 and 40, also 45 and 50, and then you had a bit of accumulation 54 to 59, which is obviously earlier in the year when we were up there, right? So just kind of shows you where the activity has been centered around and arguably provides some sort of price support. That's the idea, right? So 45 to 50K, because there's like quite a lot of volume in there that's been trading. Arguably, people look at volume shelves and things like that in technical analysis, where this is some kind of version of that, which is basically suggesting that 45 area should provide some sort of support in the near term, right? So that was one thing that I noticed on the on-chain stuff. Another thing that on the on-chain stuff this week, it's Glassnode that I look at, and they talked quite a bit about the relatives between Ethereum and Bitcoin. It's the first time I've seen them do that. So a couple of charts that stood out to me. If we look at transaction fees, okay, you've got Bitcoin on the left and Ethereum on the right. So obviously you had these massive spikes in sort of April, May time as we hit a peak, and then it's all collapsed. And transaction fees in Bitcoin have remained pretty much at their lows. Whereas if you look from July into August, what's going on in Ethereum and the transaction fees there. So quite a decent uptick in Ethereum transaction fees. So that's evidence there, and that's being fueled by the NFT explosion, right? So as NFTs are now getting back more hype around them, and it's bringing more people into the space, that's all within the Ethereum ecosystem, and we're seeing that in terms of transaction fee activity, basically, right? And that again maybe adds some fuel to the fire that Ethereum may have some more outperformance left in it, basically. Yeah. And then the other thing that was quite interesting to see was the hodl waves, as they call them, right? So this is trying to identify the behavior of coins and the age of coins, right? So that you should be able to see that. Okay, everyone see that? Yeah, good. So this is the hodl waves, right? So what's this telling us? So this is basically, the color coding is basically showing you the age of coins, okay? So at the bottom, the reds and the oranges are young coins, so people who've bought quite recently. And then the higher you go up, those are the old coins that have been holding forever, basically, okay? And you basically see since sort of January, this trend down in the younger coins. So the percentage of coins that are being held that are young is going down, basically, right? So as a load of people bought, the idea is as a load of people bought in, and it's probably more pronounced here in Ethereum, right? So in Ethereum, you can see this big load of activity, you know, in people buying coins into those highs, into that explosion, okay? And then the younger coin, then there's this big step down, basically, right? So percentage of younger coins drops, and that step is now moving as we go through time. That step is still in there, basically, right? So that's just showing you that a load of people who kind of bought Bitcoin back then and the price dropped on them are still holding, basically. It's not like they've puked it out, basically. So the idea being that people are willing to just hold and hodl these coins. And so the percentages of young coins are just disappearing, and the percentages of the older coins are growing because people are holding them for longer, basically, right? And that's despite the market exhibiting a lot of volatility, right? So that's quite interesting to see that, right? People entering the market, getting nailed, massive correction, and they're just holding and they don't care, right? So that's the mentality. A lot of the mentality within crypto is this hodl mentality, where people who are getting into it and who are buying into it are doing it for the long term. They're not just doing it for the short term, right? So whereas a lot of people think retail speculation is all short-term behavior, it does seem like there's some evidence on chain that shows you that a lot of these people that pile into crypto don't mind just sitting on it and having it there for the long term, because they buy into some of the arguments as to why they're doing it, for long-term purchasing power protection, for long-term getting the adoption kicker that they still think the adoption of NFTs, the adoption of Ethereum, the whole DeFi space and the ecosystem is only going to grow, in their opinion, and it's a longer-term game that they're playing. Then they don't mind like just holding, and even if it goes down 50% in their face, they'll sit on it, basically, right? So that's what this kind of stuff is trying to show, maybe, which is arguably fairly bullish, right? And then if we go over to the option stuff, the volatility metrics on crypto. So let's see what's been going on there. So first thing to kind of look at probably what the term structure has been up to, right? So a week ago, what's been happening? So you already had a bit of contango in the curve, right? That we'd said the front end was trading a lot cheaper. And now you're starting to see a little bit of a drift in the long, but pretty small, right? We're talking a couple of vol points here or there in the long end of the curve, but we are starting to see the long, as the curve gets very steep, that's the way vol curves tend to behave, right? So realized vol collapses, front end gets hit because that's where the gamma is, and that's where people want to earn their theta and harvest that premium. So front end goes into a steep contango, and then if nothing changes, the long end can't really stay so expensive for so long, and it starts to catch up, right? And then we're starting to see a first sign of the long end start to find some selling as markets remain, realized remains low. If you look at where realized is, I mean, it's pretty low. Yeah, it's 7-day realized is on a 40 handle now, which for Bitcoin is very low. Yeah, if we move that to a 30-day, it's at 58. Yeah, so still significantly lower than where all the implieds are across the entire curve, basically, right? So kind of explains why that curve's seeing that selling pressure. Yeah, so that's what the term structure is doing, and what the realized vol looks like. The skew on the skew front, you've got a decent move actually. So generally, like all the premium for calls is kind of going away, right? It seems, so particularly on the short end. So if I expand that and add some of these other maturities, so we're seeing a move. You see here, you had calls on the 1 month were trading, a couple of vols earlier in the week. Where was it? 2 or 3 vols over. They moved all the way to 4 vols for puts. So they flipped. And now they're kind of chopping around at close to 0, basically, right? So fairly symmetrical skew on the 1 month. On the 7-day stuff, it's for puts over 2 vols. And for the 3-month stuff, it's still for calls, which is 3. And obviously, as you go super long dated to a year, it's still firmly in the camp of the calls, whereas 8 vols over for the calls. Yeah. So skew saying, and you often see that. You often see the call skew get hit post expiry, right? Because if you think about a typical flow that's out there in a lot of markets, is call overwriting against long positions, right? So, if we home in on September, that might maybe show us in a bit greater detail if that has been the case. So you look at what's been going on, actually not so much. If we have a look, I would have suspected to see some call selling. So from a couple of weeks ago, we are seeing that. But, normally when you've got a load of people, let's say, have done overwriting, and if they've sold a load of these 50,000 calls or anywhere above there against their longs, then once those things expire, there'll be sellers of September calls, and you'd expect to see more selling flow hit the upside in the short end. But actually, it doesn't seem like that's really what's happened, right? If we look at 1 week ago versus today, get rid of that. This is 1 week ago. We're actually seeing a little bit of a bounce in some of those calls. Okay. So yeah, so you've just seen a flattening of a more symmetrical kind of skew surface, but literally in the last week, this is actually saying calls above the 70K area are actually having a bounce. So that's what that is. Okay. And then the only sort of flows, the flows haven't been created, like the volume hasn't been massive. We did start to see on Friday, as the market was breaking post Jackson Hole, and crypto got a bit of a bid as well, because a lot of people get excited about the prospect of a breakout over the weekend. It seems a lot of people pile into calls on a Friday. And so we started seeing people buying like the 10th of September, so 2-week call options on the 52 and 54,000 strikes to try and get leverage to a rally, which never came, basically, right? So that's whilst, those are bullish flows to see. We didn't actually get the follow through. You didn't actually get the move, right? So that premium, whilst it's not, that premium's not gone to zero, it's just, you know, that those calls haven't performed yet. And anyone who bought those calls should probably be wary. You know, if we don't get a break over the next couple of days, then you probably want to roll them or get out of them, basically, right? So my trading activity in crypto has generally been, so obviously I've been long Ethereum calls for a while against short Bitcoin calls. I had been rolling all my Ethereum into September to give it more life, to like prolong its life, prolong that premium, not let it just go to zero. I stayed short some August Bitcoin, which went out worthless. So that worked. I also did a cheeky trade where I was pretty convinced that the August expiry would cap the market. So I sold some 50,000s in August and I bought some 10th of September 52,000s against it. And that was basically to try and get long the calls for 10th of September, but to cheapen it up, being confident that we weren't going to break through 50,000 by last Friday. So I managed to collect all the premium of those August 50K strikes. And now I'm sitting there long the 10th of September calls at a discount, basically. And I will, again, I'll probably give it a few days, probably give it into the middle of this week, or I'll let the price action dictate it, right? So either by the middle of this week, if I haven't got a breakout, I'll either just take those off or roll them or turn them into call spreads, maybe to like manage the time decay on them. If we break below that 46K level in Bitcoin, which is the support zone, then I would consider just puking those out and getting out of them, because they're so short dated that if we don't get the rally quite soon, then that premium just isn't going to work for me, basically, right? So I don't want to let that just go to zero and never quite make it, even if we go down and then get a bounce, basically, because that bounce needs to happen quite quickly. So that's kind of how I'm managing my Bitcoin position. And my, like I say, on the Ethereum stuff, we look like we might be getting a break here of 34, which will be good for my September calls. But I am getting a bit sort of wary of these September calls and whether or not they're actually going to end up doing anything, and considering turning them into call spreads or rolling them into October to, again, give them that little bit of extra time for when Ethereum does catch on fire and have its run up to 4,000. I don't want to be in a situation where I just don't have any time left on my options to make any money, basically, right? So that's what you've got to do when you're running options to express views. You've got to be cognizant of, if you run out of time and your view even does play out, you might make no money. And that's the risk you're trying to manage a lot of the time. Yeah. Thanks for watching, guys. If you like this content, please subscribe to our channel, give the video a thumbs up, and hit the notification bell so you don't miss out on future videos. To watch the entire macro call, which includes the live Q&A and a walkthrough of all my top trades, you can sign up for a free trial to Macro Insight. If you join our exclusive trading community, you'll get access to our Telegram group, and you'll also get weekly market reports summarizing the macro call. The link is in the description to the video. And for more information, you can connect with us on socials, or you can visit our website, options-insight.com. Thanks a lot.